There is a light at the end of the tunnel. What does that look like? We're not sure.
The Bank of Canada announcing Wednesday that key interest rates will be increasing yet again, going up 75 basis points to 3.25%, the fifth consecutive increase this year, an attempt at curbing inflation, but in the short term, people will need to hold their wallets close.
You need more of an income in order to qualify for the same house at the same price that you used to qualify for half a year ago.
This might not be the best time to buy property, but financial planners saying your best bet is to lay low and keep your budget in check.
Get really good with your own personal budget, know your numbers, and figure out, just because, my pre-approval says I can buy a home for $700,000, realistically, in my real budget, is that payment going to work for me?
It's the fiscal cycle, and historically, rising interest rates will eventually come back down.
We had increased interest rates, trying to curb inflation, trying to stabilize the economy, but those were followed by lowering interest rates as well. And a lot of the experts are predicting that that's what's going to be happening in this market. Having said that, we think we're going to have more increases before we have decreases.
But what can Canadians do in the meantime? Assess your budget with the knowledge that things might get worse.
If the interest rate went up another 1% and my payment went up another X number of $100, am I still going to be okay? Or is this going to start to give me anxiety and keep me up at night?
The cost of living is rising across the board, Rajan saying consumers should keep an eye out for prices going down and to speak with your financial planners about your situation.
I'd like to remind people you're not alone. If you need help, seek help. It's the most courageous thing you can do.
In Calgary, Jillian Code, City News.